delivered a stellar Q4 with record net interest margins. However, it turned out to be a mixed bag for both Yes Bank and IndusInd Bank. Ritu joins us now to wrap up the earnings report card for the banking sector. Ritu.
Well, Shireen, to start with, ICICI Bank has really set the bar high. So, it's a bit unfair to be able to, compare all of these other earnings. But that said, let me start with IndusInd Bank because that is the bank that reported numbers today. It was a steady quarter, not to be compared with ICICI Bank. Of course, it's a smaller bank in size. Profits beat estimate, but net interest income was slightly below what our poll had estimated. It's up about 17.2%. This was, again, in turn led by a good growth in business momentum as well as steady margins. Now, margins is another story I'll just get to. Asset quality was stable for IndusInd Bank. There was a slight improvement in both the gross NPA and the net NPA ratios. Provisions had come down, which also aided the profit growth in the quarter. Deposits steady and advances growth quite healthy at 21%. Then let me come to ICICI Bank, which really is a star of the show. I mean, quarter after quarter on various parameters, it has been outperforming its larger peer, HDFC Bank, on parameters like return on assets, on margins. Margins, are now at an all-time high for ICICI Bank at 4.9%. Even domestic margins close to 5%. Net interest income growth is the best in the last 8 years at the very least. And this is the highest ever quarterly profit, which has been reported by the bank at little over 9,000 crore rupees. Deposit growth, however, has been lagging HDFC Bank. That grew by about 11% year on year. Advances growth is strong, about 18.7%. Slippages came down quarter on quarter, and net NPA and gross NPA also improved. However, going forward, there is a question mark on whether these margins are sustainable. Yes Bank, again, it was a mixed bag because net interest income, again, that was up about 15.7%. Profit was down almost 44%, and that is because margins were far higher in this quarter compared to the same period last year. Net interest margins, that was at a 9-quarter high for Yes Bank. Slippages, were up slightly, but, sequentially they were down at 1,196 crore rupees. Asset quality disappointed, and this is largely disappointing also because a chunk of the NPA of the bank was transferred in the previous quarter to JC Flowers ARC, and still we're seeing some stress remaining on the book. Now, when I come to talk about margins, remember the interest rate trajectory has been upwards, and therefore it is a win-win for banks. But now deposit rates are also starting to catch up. So all of these banks, the common theme across has been improving margins. Will that sustain is the bigger question to track, and whether the advances growth, which has been quite healthy, will continue to play out in FY24 as well.
All right, Ritu, many thanks for joining us and staying with the banking sector. It's been a stellar FY20.